So this was really fascinating. So the capital stress buffer by the Fed was meant to streamline the regulatory demand for banks, but actually could result in the big banks paying more. Walk us through what you learned yesterday.
So essentially what the government is trying to do, and this is one of the biggest first steps that Trump's administration is making to do what it said it would do, which is essentially make life a little bit easier for the banks after Dodd-Frank, to streamline the regulations. So essentially they're sort of cutting down the number of requirements you need to make to jump over this hurdle of the stress test. But for the bigger banks, it may actually mean they have to hold a little bit more capital. For the smaller banks, it may mean less. So essentially, this is a proposal. It'll be out for a 60-day comment period.
So when I read this story, my first question is, if I'm Bank of America, if I'm J.P. Morgan, am I happy or am I sad? Because on the one hand, it looks like my capital requirements may go up a bit, although it appears I've already reserved for that. It's not going to actually require me to reserve more. On the other hand, I don't have as many things, many hoops to jump through. Right? It ties stress tests into the capital requirements.
Right. I think it's a mixed bag, but overall, I think it will be good for the banks overall. You know, we did see a lot of the smaller banks, community banks, really take a hit through the Dodd-Frank regulation, and they've been essentially saying for a while, we need a little bit more help here. And overall, I think most of the financial industry has just been saying we need less and more streamlined regulation, and this is what they have with this.
This is Randy Quarles' first big move, right?
That's right.
In his new role. Okay, does this confirm his role as the deregulator-in-chief that he was billed at, or are people saying, well, maybe not so much deregulation?
I think so far he's basically saying, yes, we're streamlining, we're cutting down the number of regulations, we're going to make it easier. The question will be if it does crimp somewhat what the larger banks particularly are able to do in terms of paying out dividends and buybacks.